Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended March 5th, 2014, the traditional mutual funds industry saw inflows this week, mostly in equity and taxable fixed income. We had some light outflows in money market funds. Let's take a look at our macro groups for more detail. Starting off at the top, equity and taxable fixed income both had inflows this week of about $2.8 billion. Coming in way below that was municipal money market funds. They had inflows of about $100 million. And finally, money market funds saw outflows this week of approximately $2.6 billion. Well, for equity funds, it certainly was an interesting week. We saw some saber rattling in the Ukraine between them and the Russians start to shake markets a little bit. But by Tuesday, nerves had started to settle down a bit as Putin made some, well, what may be some reconciliatory gestures towards the Ukraine and its independence from Russia. But let's take a look at the flows here and see what happened. For the most part, with the market up about 1.2%, we saw fairly steady inflows from equity mutual fund investors. Curiously enough, alternative long-short funds were the week's best winner. They took in about $470 million. They've been taking good flows all year long, so maybe not so much of a surprise there. But emerging market funds did take the second most at $443 million this week. This is in sharp contrast to what's been going on with equity ETFs. We'll talk about that in a moment. But overall, $2.8 billion for equity funds was very good, considering all the potential problems that politically investors had to walk about. Curiously, one of the year's best inflow gainers of the year, the MFS the Oakmark International Fund, actually had inflows of just $13 million this week. Maybe things are going a little strangely for investors with respect to that fund. This is usually a $200 million a week take, so for inflows to dive down to $13 million is a little odd. We'll keep our eyes on that for future developments. The next group to take a look at is equity ETFs. As I mentioned, they had a very different view of emerging markets this week. They actually withdrew money again, the 8th week out of the first 9 of this year that equity ETF investors have withdrawn money out of emerging market ETFs. We did see some interesting activity when we're looking at the top gainers and top losers this week. We think that Good Harbor Financial, a hedge fund headquartered in Chicago, that kind of caused a stir in flows last month, maybe muddying the waters again this month. If we look at the flows into the iShares S&P 500 Core ETF, IVV, it had some outstanding inflows this week, but it also had some outstanding outflows of the first week of February. So we think that Good Harbor Financial might be causing some disruptions in the flows data overall for equity and taxable fixed income ETFs. So we'll be able to get a better sense of market sentiment in future weeks as their activities start to work their way out of the system. The next group to take a look at is municipal debt mutual funds. Again, they had inflows of about $100 million this week. Not too bad for them. The flows are in this area seem to be in a pretty good place right now. This is the 4th week in a row that they've had inflows. Performance is still positive for municipal debt funds. So overall, we should expect to see a few more inflows, maybe things starting to speed up a little bit in the coming weeks. Interestingly enough, and perhaps a good sign for these funds, is high yield munis had good inflows this week, about $163 million. So it's some evidence that investors are willing to take some chances with municipal debt. They probably look at the outstanding yields in this area and think, how could I lose? We're also seeing good performance in Puerto Rican bonds. That was a major concern at the end of last year as to what would happen with Puerto Rico. They seem to be saying the right things to keep the market interested in their paper. There's going to be some potential new issuance out there, so we'll see how that market develops. Right now, with yields at close to 9-10%, investors are certainly willing to take their chances on Puerto Rican debt. The final group to look at is money market funds. They had about $2.6 billion in outflows this week. About $600 million of that was attributable to retail instruments, while about $2 billion was those outflows from institutional money market funds. Not a real interesting development or a week of inflows here. Those are pretty light figures for both those groups, and overall, not a number that would capture anyone's attention. Well, that will wrap it up this week for our flows analysis. Join us next week where we'll talk about the latest week's flows data, or join us online at lipperusfundflows.com. Thanks for watching.